Good afternoon, ladies and gentlemen. Good afternoon. If you give me a quick sound check, please. All good. Excellent. Thank you very much, guys. Thank you. Good to see you all. James, Ian, Nadia, Braden. Good to see you, team. I hope you've had a good day today. All right. So, what's been occurring? Let's have a look. See if anything's happened. Yeah, CAD Swiss is triggered. Euro was still underway. Euro NZD still at break even. Pound Swiss nowhere near entry. Corn's breakout yesterday. Wow. That's what I have to say about that one. Just purely wow. It was one hell of a rally. It really was. Right at election time as well, and the same as the stock market breakout. I mean, we got a gain of 3.13%. That's really going some. And it's such a bloody shame as well, because we were literally a stone's throw away from getting into liquidity before triggering, which unfortunately we obviously didn't do. And so therefore, yeah, nothing actually came of that one in the end. But really, really nice big explosive move there. Natural gas, nowhere near that one triggering yet. It's just kind of still grinding along sideways. And then, yeah, we've got UK Brent, which is where we started. And UK Brent currently at break even after making it about 55% of the way through our position. So, bit of a mixed bag so far, not in terms of wins and losses. Yesterday's stock market session was completely completely wasted. Not in terms of, us wasting it in particular, but it was just such a waste of time. And nothing happened. Nothing came to fruition. And we had to wait, really quite a while until, 5:30, I think it was. No, 6 o'clock, sorry. 6 o'clock before we got like a really decent breakout. And the retest was so flimsy, it really didn't have too much weight to it. So I'm not even sure if this was it, sort of 3 o'clock in the afternoon. I'm not sure I would have even taken that BCR anyway. It was so flimsy. But yeah, and then from that point on, we just kind of had this very, very slow dwindle along sideways. So yeah, really, really poor performance from all of our stock markets yesterday. The S&P 500 as well, very much the same thing. Had the breakouts in the afternoon, 4:30, 5:30, 6. Probably broke structure on this candlestick here, and that's at 8 p.m. GMT. And then we just did the same exact thing, kind of dwindled along sideways. And then, of course, the US 30 Dow Jones, again, had absolutely nothing occurring at all. Don't worry about that trade. That's not something that was taken. It was just left there after yesterday's analysis. And again, we just didn't see much of anything. So stock markets at the moment are completely at a standstill. We may today start to see some correctives following the initial election breakouts. The election structural breakouts that we saw yesterday were pretty extreme, I would say. They're, largest single daily gains that we've had in a long time. The market actually closed up at these highs, as you can all see. So if we look at the S&P, the NAS 100, the US 30 Dow Jones, they really did. They closed all up at the highs there. No contraction yesterday whatsoever. So I would believe that yesterday is going to be pullback day. Now, things worth noting here. The NAS 100 is at all-time highs as of today. Exhausted. Exactly, James. Yeah, very tired out. Yeah, exhausted. You're absolutely right. So the NAS 100 here has broken structure and has indeed formed a new all-time high. So the first time since this point here, which is in July of this year, we've come back down. We've now formed a new all-time high. The S&P 500 has absolutely crushed its all-time high. There's no waiting around for that one, is there? So that's there, structural point. This is where we probably had quite a lot of institutional liquidity sat in the market. And yep, trend has continued officially. So now the new all-time high is 59.56. And then, of course, we have the US 30 Dow Jones, which had a beautiful day yesterday in gains. It really did. Shot straight through the roof. And that yesterday was a 3.73% move in one single day. I mean, just to put that into perspective, just eyeballing it here, 3.73% candle was probably that one there, the most nearest one that we had. What's so from the high to the low? Yeah, that's a big candle, right? So that beat it. So that was the last time that we had that kind of move, and that was in, as I said yesterday, 2022 September. So been a while since we've seen that kind of volatility. Now, so we've got a little bit of a recap done on the stocks there. We know where we are with the fund at the moment. There's not really too much more I want to say at the moment. A lot of our positions are open and running. The others are pending orders and waiting to open. We have not yet, touch wood, incurred any losses. It's been a slow but winning week this week so far. Bearing in mind, we only really traded the stocks, didn't we? Monday through Wednesday. In terms of what's going on this afternoon, it is, of course, the Thursday. And so, therefore, we've had and will have a lot of stuff going on. The BOE rate decision, we did indeed drop down by 0.25% from 5 to 4.75% from the BOE. The pound, as a result, if we go down to cable here, has had a bit of a surge. So if you look at the 15-minute time frame, we look at the BOE move, this was it. So nice little move there, actually. Pretty decent order block and breaker structure. I would have said that, that's actually not too bad. It's not much in comparison to the old days, of course, but it's still not bad. Currently up 0.66%. Nothing earth-shattering, nothing groundbreaking, but pretty good nevertheless. So that's all we'll see from the BOE volatility today, guys. There really won't be too much more from there. I should imagine that we will continue this upward. I'm going to use the term trend, but it's not a trend, not an established trend by any sense. Just this little upward move here. I think that's probably going to continue until the late hours of this evening. We'll probably be aiming for around 130.20 to 130.40. Possibly have a bit of a reversal there. I do not think it's going to be as strong as the last two. It may even account for a bit of a price action pullback before going for an actual breakout, and we may continue the trend really to the upside. So if we look at the daily chart, okay, this is where we are at the moment, forming a consistent series of at this time higher lows and higher highs. Well, this could just be the structural breakout that we've been waiting for, coming up in here, this area. So that's where we're at the moment. We get a breakout above this one, we could then continue to trade higher up to the previous highs at 134 and beyond. So having a very expensive pound versus the dollar. Now, going back to the econ, of course, today is the day. We have the Fed interest rate decision. Looking at a 0.25% drop from the Fed this time around as well. We've had, there's been a bit of a mixed basket of data from the US regarding inflation. It's not been as crystal clear, I think, as Jerome would like. But I still think the 0.25% drop is on the cards. So I don't think there's going to be a surprise shock event of keeping rates at 5%. I still think they're going to cut their rates nice and slow. They have had some sharp declines in other areas that would really put the pressure on to get those rates down. But then there's other things in the short term data that is kind of being sticky and being a little bit problematic to them. So I think 0.25% cut in the rates at the moment is probably the most, I think it's the wisest choice, to be honest with you. Do things in baby steps. That's the kind of thing the Fed likes to do. Obviously, they're reactionary, just like every single other central bank around the globe. But the press conference, same old questions we want answered. Projection, forecast. Do you have any information on where you think rates will be by this time next year? What's Q1, Q2 going to look like at 2025? These are the kinds of things that we want to be ear to the ground on. So that's coming up later on this evening, 7 p.m. It's a bit of a late one. For many of you, it's going to be family time and stuff like that. I honestly, at this stage, I'm still kind of in two minds about streaming it. Yeah, same ramble, different day. Exactly, man. That's why I'm in two frames of mind about it. It would be kind of good to trade it, um, but the elephant in the room is the election still. And so I don't know if that's going to have some kind of knock on effect to a Fed interest rate decision, if it's going to be just as explosive, if it's going to be even more so, or if the two are going to cancel each other out because everyone's too focused on old Donald Dump rather than what's going on with the Fed. So yeah, I'm not entirely sure, but I do appreciate it's a bit of a late one for everyone, especially those of you around the other side of the world. It's even a bit of a late one for us here in the UK, to be honest. So I probably will end up avoiding it. But just be aware that it is there. We've got some Euro exposure here, team. We've got obviously the Euro NZD. We've got the Euro Oz. Because of that Euro exposure, we are going to be taking a bit of a brunt of the Fed interest rate decision through the US dollar, obviously dynamics there. In terms of the cross correlation that we have with those two currencies, the US dollar and the euro, I think what I would probably do, if I was a wise trader, which is questionable at times, but I think what I would do is just have a exit strategy that essentially will get you out of the market. I would say if we get a breaker structure above this area before the news event takes place. So if the market comes up and through this area before the news event takes place this evening at 7 p.m., then just get out of the trade. You don't have to be sat at the screens permanently in order to wait for it. You just need to come across here, stick an alert in. Whenever the alert buzzes, just keep your volume on extra loud on your PCs, your laptops, your tablets, or whatever you're using. Keep your volume turned right up so you're aware of when it goes off. And then just get out of the trade at a small profit. If it does decide to, well, and that's it, to be honest with you. That's pretty much it. I don't think there's any reason to do anything else, to be honest, at this stage. Because thinking about it, the Euro Oz and the Euro NZD, these have downward trajectories. I mean, the Euro NZD is looking really quite shaky at the moment, but they have downward trajectories, okay? So there's no reason to think that this is going to be a proper decent turning point. So what I'm thinking is if these Euro assets, I mean, the Euro NZD is a different kettle of fish. I just wouldn't touch that one where it is at all at the moment because it's so close to entry. But because of where, especially this Euro Oz, if the market does decide to have a bit of a spike from the FOMC, then, we've got a lot of margin here to cover ourselves should the trade turn into a loss. If we come up to this area, right, before the FOMC, then that margin is significantly reduced. But from where we are at the moment, or even lower, anywhere down here, and we bounce back, we're probably going to be protected. And then the market will just resume its normal course of action like it does 90% of the time. And those are favorable odds. Those are kinds of probabilities that I like working with. So that will be the plan for the Euros. So in terms of other things that will be Fed affected, not really the CAD Swiss. We'll be fine with that. The pound Swiss as well will be absolutely fine, even though that's not a running trade. Our UK Brent probably will be affected by the Fed volatility, and that's already in a loss at the moment. So just leave it, guys. Just let it go. It's fine either way. At natural gas as well, that's not even running at the moment. So I mean, in terms of risk adjustments that are needed from the Fed this evening, our risk profile from a portfolio's perspective is actually pretty good. I don't think there's anything that we need to really be worried about here. Maybe a little bit of admin when it comes to the Euro Oz, and that's about it. That's literally the only thing we need to be sort of really focusing on. Right, so that was a lot of words. So I think next up, are we going to be looking at further FX positions in the current state structure now with the FOMC this evening as well? It doesn't really make sense. I think increasing the risk exposure when I've just literally said that we're pretty much ready for this evening's FOMC and for any kind of outburst from the election yesterday, I think it would be a bit silly Now, I definitely don't want to be stuck in anything US dollar related. I don't want to be in anything euro related on top of what I already am. That leaves a small minority of assets that we can get exposure to. Gold, by the way, is here. And so gold has actually got a counter trend break of structure, which is going on here at the moment. This level does require a BCR. So we'd be looking for the break close retest inside this area, and then we'd be looking to take the market all the way back up to, I don't know actually. I mean, that area in there is not too bad. It's not perfect though, is it? Because of this rebound. It's not actually perfect. But I mean, if we got a break close retest of this area, that might be a nice little intraday trade up to there. But again, I don't want to trade it because the FOMC, it's an intraday trade and it's not directly FOMC related, so it just doesn't make sense. So yeah, I think we're going to stay clear of pretty much everything of what we got going on at the moment. Commodities, forex market. It's been a real heavy week for the markets. It's been a heavy week for the traders as a result of everything that's been going on as well. It's not, I wouldn't say it's been too crazily volatile or anything like that, but there's just a lot of information that the markets are having to digest. And I think it's good to let things settle down in periods like this and just let the markets do what they want. Now, of course, we are going to be trading our US stock markets this afternoon. They are at the forefront of what we enjoy doing in the markets on a day-to-day basis. And so, therefore, we are still definitely going to be eyeing up some stock market breakout trades to fuel our portfolios. So, let's start with the US 30 Dow Jones. So, I am going to be, as I said at the beginning of the session today, I am definitely going to be in bearish mode for the stocks. Does that immediately mean that I am going to have no bullish bias whatsoever? Of course it doesn't. I am going to be trying to position constantly on both sides of the market because no matter what the market does, I want to be earning that money. I want to be bringing in that rev. So looking at something like the Dow Jones at the moment and where it's trading, it does make things a little bit tough for the bullish side because frankly, we're not going to be breaking the structure up here for a while, and that's the only time I'm going to look at a bullish trade. But it is what it is. So that's the ceiling of the move at the moment. That's what I'm going to be waiting for to see a breakout long. Now, from a 1 minute time frame perspective, I am going to be looking at a break close and retest and then a fixed 1 to 2 trade. Super, super simple. If we go down to a 1 minute time frame here, I think that level's quite satisfactory. I don't really need to change it or manipulate it in any way, just for the 1 minute chart. So it's going to be a breakout, a retest, and then a 1 to 2 trade as soon as that's been retested and breaks structure. So let's say, for example, the structural breakout takes place at 43.91. Then I'm just going to line that up. I'm going to have the stop loss there. And no matter where you put your stop, the stop loss has to feel safe. So don't go and have, some crazily tight stop loss like this just so you get your 1 to 2 in the basket, because it's not how we work. Okay, so you want to work with the stop loss first. Okay, you're a risk manager before anything else. So if we have our stop loss a nice margin underneath that level, then we utilize our target based on the stop. So the target then goes up to a 1 to 2, just like so. And that's it. That's your trade idea. That's your long. Now, for the short, I mean, we've got a pretty decent trading margin to work with in here, don't we? Right, so that, I think everyone would agree that's the floor, right? I think that looks like a pretty good floor. Multiple retests, cruise up and back down again, straight to this area to retest. And if that's not proof enough, look at the size of the candles that we got once we got down there. We got down there and boom, really nice bounce, which means that there is buying interest at around 43.74 to 43.76. Now, the market has come up to the midpoint of this potential M reversal. I say that, please take it with a pinch of salt. We don't know if it is an M reversal yet or not. And we're also looking at this on a 1 minute chart. But it is a retest of the M reversal so far. If we do come back down here, this is actually a really nice margin, right? I think we can all agree on that as well. There's definitely the scope to trade in between these two. So possibly this now not this now becomes not the only long that we can take today. And possibly what we can be doing is looking for a long in between these two margins. Now, if I look at this area in here, we've got 1, 2, 3, 4, possibly 5. It's a little bit too high, that one, for my liking. So I'm going to say 5 of this cluster of highs here, 6, 7, 8, 9. All of these points that run all the way through there. So what I'm going to do is I'm going to copy and paste this, bring that level down to there, and drag that one along. So that's going to be that. I'm also going to make it a tad bit more thin. It doesn't need to be so wide. Okay, so that's going to be there. Now this level is actually really decent. I really, really like that level. The majority of the range has actually taken place between 43.88 and 43.84. Not down here, which is the outlier. But now it does mean that we can turn this into our trading margin, and this becomes, what does this become? Anybody? Give it to me. What is it? The NML. Yup, exactly. This then becomes the NML. And we have a trade idea on top, and we have a trade idea on the bottom. Now, we can be absolutely looking at trading longs between this area here, this area in here, and we can also be looking to trade longs above there, and we can also be looking to trade shorts from a rejection of this level. So let's say, for example, we come down, we come up, and then we come down again. We can look at the rejection from that back down to here and trade in the lower half of this, looking for the relevant break structure that we need there as well. So both of these are looking like they're yielding some pretty solid results so far. Now, if you want to be taking shorts below here, I am not going to say no to that either. The only problem that I foresee with this is because of this point here. Now, you'll be able to see this on the 15-minute time frame as well. So if we look at the 15-minute time frame, look at the size of those areas. Okay, and this is essentially where we were trading yesterday. We have this area in here as well. So we have to be considering these when we're taking our trades. Now, for a 1 minute time frame, even on the 1 minute margins, that's too small a margin to trade. So I'm not interested. So then the only opportunity that I really have to get stuck into this is then going to be down here. And that is going to be a break, close, and a retest. So then we're looking at the breakout, the retest, and then the big push down. The big run down to 43, 42.50. And that's a big trade. You know, if you think about it, that's going to be quite the loss for the day. And are we going to be done with that one at the time of the FOMC? Because by my very speculative price time ratio that I'm kind of working to here, I would imagine that that's going to be completing at or on the dot of around 7 p.m. for the FOMC, which makes me nervous. I don't want to be in an asset that late. I definitely don't want to leave it running until the FOMC this evening, because the entire thing could go pear-shaped. So you can take that trade, but what I think you should do is take that at a 0.15. So you can make a mental note of that or write it down. If you want to take that trade, highly advise 0.15. Your return, based on the required risk reward, is going to be in the region of a 1 to 3.5 to a 1 to 4. So you're definitely going to be making money off of it, okay, regardless of your low risk on the position. But it is also going to provide the necessary safety if you get caught with the FOMC later on, because that's a big trade. That's intraday style. That is not day trading. Whereas these little ones are definitely day trading. So that's going to be the plan for the US 30 Dow Jones. Is everyone clear on that? Everyone got a good idea, good picture of what needs to be done? Yeah, okay, cool. Yeah, good. Good. Excellent. Alrighty, yeah, so that's the US 30 Dow Jones broken down. So let's check it out. US tech stocks. Start at the 15. And let's work our way down. So, yeah, we don't need any of that anymore. So I'm going to recycle. I'm definitely going to recycle one of these things, like that one there, for example. Yeah, there's no reason to not use that. So the NAS 100 at the moment is still kind of trading to the upside. I mean, we've only just before I came on stream actually formed the all-time high, which is 2909, and it's remaining relatively stable up at these highs at the moment. So we have to be quite intricate with our margins here. I mean, the break of structure is going to be this area, right? So that's not going to necessarily be the low that we're looking at. That's actually the break of structure for an entry point. So we can have that even thinner, to be honest, and put that in there, just like that. And then at the highs, we've got this area in here. Now, in order to take a long in any all-time high market, is break, close, retest, fix 1 to 2. Same strategy, tried and tested over many, many years. It works a lot of the time. So we're just waiting for the break, close, retest, fix 1 to 2. So I don't even need to put the panel on there, okay? Exactly the same as the US 30 Dow Jones. Break, close, retest, fix 1 to 2. The short is where things get a little bit more interesting. Now, I don't know if you've seen it instantly or not, but there is, in fact, an ascending level rising up through here. And this probably goes back a ways as well. So if we get that and drag that sucker forwards, this has kind of been utilized by price action a little bit whilst it's been up here. Because if we also copy and paste this, we can also sit that perfectly on top. So now we've established that the price action in this moment in time is in a bit of a channel. Not a trend, just a channel, but a channel nevertheless, which can be, it can be trusted. It definitely can be trusted. It's well enough established. So what we're now in the position of doing is actually saying, well, I can't trade in between here and here because the margin's too tight. But if we get a breakout of this channel and of the liquidity and the sort of nearest liquidity point, we've probably got a really big margin of trade. So I wouldn't necessarily be utilizing 2082, but actually this point here, they broke out of the channel last time at 2077. So let's get a zone. Let's pop that in the charts there. Right, so that's basically going to be what I'm going to use as a target profit. So let's go down to the 1 minute time frame now to get a bit of a better idea of things. Okay, so this is representative of no man's land. We have the long, which is a break, close, retest, and a continuation, which would naturally see the price break free of the ascending channel. Get a break, close, retest on top would not only retest the liquidity, but also the upper limit of the channel. The short is going to be a little bit of a mission. Yeah, that's right, James. Yep, you're absolutely right, bud. The short's going to be a little bit more of a mission because we have to drop down through here. It's a bigger margin than I thought it... well, hang on a bit. The level needs to be raised up. There we go. So... Nah, it's too tight, isn't it? It's a little bit of an optical illusion on the 1 minute time frame down from the 15. So it makes it look a bit bigger than it is. I'm trying to decide whether or not you could trade that. You could definitely trade it here, but I think too much time has passed. Yeah, because the breaker structure point would be there. Yeah, I'd want to say about there. So then our entry would be here. Yeah, way too small. Yeah, way too small. Okay, fine. So what we're looking at here then is the breakout all the way down, all the way through, and then we'll be looking at some kind of retest of this ascending level, this lower limit, which aligns with the point of interest in the price action anyway. And then we wait for the breaker structure, and then we go for the short. Now, looking on a 1 minute chart, this is whopping. So now that I'm on a 1 minute time frame, not the 15 anymore, this trading margin is way too big. Way too big for a 1 minute trade. So then I'd be looking at, in the past, at this bit of price action. Let me just make this a bit clearer for everyone. I'd be looking at this area of price action to try and source a good TP. Okay, so if we think about the beginning of price action pullbacks and the big ones, would something like that be a good point for a TP? A 2081, well, yeah, 2081, 2081.20. What do you guys think? Do you think that's going to be a decent enough place for a TP? Or not? And what do you think? What's your thoughts? Hello. $20.82. I think it is. I think it would be good. All right, hard to see. So, for example, like this area in here. Nadia is saying 2082. Yeah, the numbers are always difficult to see. So 2082 is across this point here. That's 2082. So then if we drag that one back, the amount of reaction it's had to price action in here probably could be doing with having a little bit of a rise to 20. Well, it's still 2082, but it's in the minority, so 2 to 7. Right, so then we move that along. It then accounts for most of these highs, with the exception of a couple of fake outs. But that actually does look really good, doesn't it? And then it also encapsulates the low here for the majority of it. So I completely agree. Yeah, I completely agree. So then our trading margin now becomes the breakout, the retest of this area, and then the move down to here. Now, if we think about the potential breaker structure point for this, I think it would be safer and easier for you and, for all of us, if we could find a breaker structure point in here somewhere, instead of waiting for the BCR of that ascending level, which we know it happens, and we all feel like absolute trading gods when it happens. But the reality is, areas like that, using singular lines, levels for analysis, increases the margin for error tenfold. Remember, money isn't placed on one level in the markets. Money is placed in an area in the market. And so therefore, I think maybe something like this, for example, would be a really, really nice place for a breaker structure. So in that area, we then have lots and lots of things happen in the market. All these highs and these lows, these break closes and retests all over the place and stuff, which really does prove to be a really nice point of entry. So then now, the actual end result, the fixed trade idea, is going to be the entry, the target, and the stop loss, which is then yielding a 1 to 3.3 for a 0.8% return. Yeah. Yeah, James, you're absolutely right, mate. Yeah. Okay. Now, where price action is trading at the moment, I mean, it's still rallying. Look, in fact, since I've been carrying out this analysis of the NAS 100, we've actually formed another new all-time high. Right? So now the new all-time high is 2914.45. It looks like we're probably going to go for another all-time high in a moment. So it's very bullish. Yeah, tech stocks, very, very bullish at the moment. If we check out the NAS quickly, that's the NAS. Just to put things in perspective, it's pretty much, apart from the occasional outlier here, a wall of green. So it's definitely having a good time today. Oh, there we go. Look, just as I expected. So we're hitting off criteria. What's the time now, folks? We're almost at 10 past 2. We're hitting off criteria before we even get involved. But remember that every high the market makes, your fixed 1 to 2 is just going to be after a break, close, and a retest of wherever that high is. So if the market makes an all-time high here, it's a break, close, and retest of that. If it comes up before the market breakout and makes a high there, it's a BCR of that level instead. If it does it again before the breakout, then it's that level instead. And every single time you are just executing a 1 to 2 here, a 1 to 2 here, and a 1 to 2 there. No matter where you are, no matter where it is. But looking at this trade idea all the way down here, you imagine that's a big sell-off. So if you think from that high then down to there, that's a 0.36% actually. That's not too bad, is it? That's not too bad. Yeah. It's a big move though. A 0.36% move before we get to the entry of the trade. That's a pretty big move. But because of where our points of liquidity are in this chart and stuff at the moment, I'm not a fan of shorting it anywhere else. That is the most highly likely place for a clean path of least resistance and everything. I mean, this is a major point. As we can see, we've hit this area, we come down. We come up, come down, breakout above, retest, big retest as well, and then we continue. So it's definitely not an area to be trifled with. Looking at the trading margins at the moment between this area and that area, I mean, it's not great, is it? It's not really, really clean. Even if I thin out that zone up there, the trading margin between these 2 points, I mean, it's really negligible whether we should be even looking at this for a trading opportunity or not. So I would be on the side of not really. This looks fantastic in hindsight. Looks really, really clean. But the thing is, when the market opens up, the market doesn't open up like that. The market opens up with a big bear or a big bull candle, generally speaking, if it, except for yesterday when nothing happened, but it generally does. And so the earliest opportunity for entry is probably going to be down at around 2089.30. And so therefore you've got a tiny, tiny little trading margin left to use. So that's going to be the NAS 100. If I had to, if you said, which one would you really want to be focusing on today, then I'd be saying the US 30 Dow Jones. The US 30 Dow Jones, I mean, look at this. The US 30 Dow Jones and the margins it has to trade, it's looking a lot better than the NAS 100. It just looks so much more consistent. Whereas the NAS 100 at the moment, it looks incredibly choppy. We've gone from these sort of wild range swings into consolidation periods, into grind fest, into gradual increases, into quite volatile increases and pullbacks, to then going back to a grind fest yet again for half an hour to an hour. It's just not got any kind of consistency at the moment to it. And now we've actually broken free of the ascending channel that we only just realized was established. So I'd definitely be on the US 30 today, if that makes any difference to you guys. Yeah, exactly. Yeah. Well, it's just come to the end of its lifespan. Channels can have a 10-minute lifespan on a 1-minute chart. They can have a 2-day lifespan on something else on a 15-minute chart. I mean, this, to be fair, was well established, apart from this fake out down here, from this point on. So all throughout the day today on the 1-minute time frame, this entire trading day so far. So that's not been too bad. I mean, there's been 1, 2, 3, 3 trade ideas that would have had a 0 success, a 0 failure rate inside it. But yeah, I mean, if it carries on going, there's no point even having it in there. Say goodbye to the channel. So that's where we are, folks. I'm pretty much going to wrap it up there, unless there's any other questions. I think if there is, I don't know about this NAS 100 short. There is the possibility to short the NAS in between these 2 levels, because the risk reward does work. So there is the opportunity for you to do that. I just feel that the market upon the breakout this afternoon might not let you get there. So I guess we can plan on it. I guess we could plan for it to short between these 2 margins, but just with the understanding that unless you are absolutely on the ball, it may not end so well, because you really will have to be on the ball with your trigger finger in order to pull that trade off. But yeah, there is an opportunity. There is an opportunity there. Yeah, well said, mate. Yeah, well said. All right, guys and girls. Well, I'm going to love you and leave you there then. I hope you have a fantastic afternoon. Good luck today with your trading. I am going to be watching the FOMC this evening. If you want to chip in, have any sort of pointers to add or anything you want to know, then please fire away. That's not a problem at all. And don't forget, folks, because I know none of you are looking at the bloody schedule, I will be on tomorrow morning at 9:30 a.m. Okay? Tie the week up. We'll have a reflection period, have a chat about what's going on and what's not going on and so on and so forth, and see where the fun's at. So have a good one. Take care of yourselves. I'll catch you later. I'll see you then. Thanks. Bye-bye.